My name's Craig Earl, I'm Senior Market Analyst at Oanda. Today we're going to talk about the pound versus the US dollar. There are two major stories really that are contributing to the movements in this currency pair, and they are really more the greater macro stories which we're seeing globally right now. The first one, of course, is that US trade war with China. Throughout the period of escalation here, we have seen the US dollar strengthen because they are a trade deficit country, and in a trade war, the deficit countries are seen as being better off than the surplus countries. Now, of course, neither side is better off in a trade war, but comparably, the deficit countries are seen as being less worse off. So what we're seeing during the escalation of these trade wars, and the US-China is one very clear example, is it tends to be that surplus, that deficit country that does perform better from a currency perspective, which in this case is the US dollar. The other story, of course, we've got is Brexit here in the UK. Now, it may not be making everyone's front pages around the world, but it very much is here. And we are hitting a crucial point now. We're just over a month away from exit day. We still don't have a deal with the EU, which is close to passing through Parliament. There's a lot more brinkmanship to play out. And while optimism is growing that we're not going to see no deal, which is what contributed strongly to the rally in the pound at the turn of the year, we have seen that pull off slightly because a deal still just hasn't materialised. Now, when we're looking at the size of the moves, the pound pulling off that move has not been quite as significant as the move that preceded it. So I do think that underlying optimism remains, and traders are very much in a wait and see mode. Now, what we've seen over the last 24 hours or so is following a pullback towards that kind of 50% level of the entire move prior to that. So we're looking around the kind of 128 to 128.50s. We have seen this pair hold up. And we've also seen a little bit of a boost now overnight because we've seen some weaker dollar action. And again, that's been triggered by Donald Trump suggesting that they may be able to push back the 90-day window if progress is being made in these negotiations. This is the first kind of conciliatory tone which we've actually had from the US president on this. The first impression he's given us that a deal does not need to be fully wrapped up by the end of this month in order to avoid further tariffs being imposed. So we've seen a nice little rebound off this level, and now that's not to say that we're suddenly going back towards 130, even 133s, the highs that were hit previously, because I do think there is a lot of dependency on progress being made on Brexit or no deal being ruled out before we start to really push those previous highs, unless we see a sustained and significant period of weakness in the US dollar. But it would suggest that we are potentially seeing some lows being ground out. And again, of course, there's a lot of factors in this. When you've got these major political stories, there's constant headlines. These stories do change from minute to minute. But right now, it looks as though we are seeing a lot of support in this pair around these levels, kind of 127.50s to 128.50s. If we break below there, then potentially that suggests there has been a shift from a more fundamental perspective, but right now that doesn't look the case, and I do believe there is general optimism which is being portrayed within this currency and currency pair. And if we continue to see the dollar weakness play out, as many have forecast now for a number of months, and we start to see some progress on Brexit, which it has to happen at some point in the coming weeks, then that could really produce some upside in this pair. And again, the key levels here for me, 130 in the near term, 133 beyond that. If we're breaking beyond those levels, then this is starting to look very bullish indeed.